Everybody, thanks for tuning in to No Vacancy, Not So Live today. As you're watching this, I don't know, I'm on a panel, I'm on an airplane, I'm nursing this horrible pimple that I'm getting for so much travel. I don't know what's going on, but what I do know is I've been traveling all around the country to bring you guys the greatest news in hospitality. And we're going to get to that in just 1 second. But first, I want to thank our awesome advertisers, Actable. Actable, they give you the power to profit. Make sure you visit them at actable.com. Remember, they are a company empowering the people who power hospitality like you. Check out Profits Like Profit Sword, giving you insights that can help you make better decisions in your business. Again, thanks to our good friends over there. All right, I'm excited about our guest today. We have got the co-founder and managing partner of AWH Partners, Mr. Russ Flicker. Perfect timing, because I just came back from a financial conference, and you are the financial guy here in New York. How you doing, Russ?
It's great. I'm doing great. Thanks for having me, Glenn. Appreciate it.
Yeah, that's great. Hey, I'm actually getting a call from a 212 number right now. The reason why I showed is I'm sure it's a scammer because all the cool people have numbers, right? Right, Russ?
Totally.
So anyway, I just came back from the Hunter Hotel Investment Conference. And before that, I was emceeing a major management company event and speaking to them. And before that, I was at the California Lodging Investment Conference. That's all this month. And I've been getting the same story over and over again. And it seems like, depending who you ask, the hospitality industry is a couple of different ways. It's awesome, not so good, or I don't know, I'm hoping to make a move in the future. And I think more than ever, it's coming down to a street corner game, what type of property you have, what type of place you have that you might be able to develop, but it's showing itself in unusual and chaotic ways. How do you see it, Russ Flicker?
Well, I totally agree. It's definitely asset by asset and market by market, and sort of who is feeling like they're doing well and who's not. My view is if they have those that are struggling, those that are in the middle, those that say everything is rosy either don't have a big portfolio or are fibbing. But that being said, are
Irreplaceable asset or something like that, right?
if that's all they have, I guess if that's all they have, yes. I mean, certainly, I don't pretend there aren't winners out there. We have a big portfolio. We have some winners and we have some losers, but it's been a challenging environment for a bunch of years now.
Yeah, it sure has been. So I want to break this down into a couple of different ways. One, I want to break it down into operations and then investment. When people talk about the hotel business, I notice we kind of lump it all in together. And I think we're in a very pronounced period where operators are probably happy that there isn't a lot of new development, right? Because it's less competition in their neighborhood. But overall, starting with the development side of business, one of the things that I've been hearing over and over again is investors need just a little bit more nudge when it comes to interest rates, for example. And then the fabled money on the sidelines is theoretically going to come pouring in. How do you see it, Russ?
I think there is a lot of money on the sidelines, but for investors to start pouring in, I think sellers need to reassess, and sellers have been holding on. And that's really been a challenge for, because they have not reset their expectations. And because there's so much money in the credit side, sellers have been able to refi and kick the can down the road, which has really slowed that volume of transactions. And so we've seen that where investors, I think, do want to buy. And look, hospitality, I think people are bullish on hospitality medium term generically, but it's been hard to find opportunities.
Yeah. And for those younger folks out there that are watching, what Russ is really talking about is, we have this thing, extend and pretend, in the world of hospitality, in particular, when the financial industries go bad during that horrible period we had starting 5 years ago this month. It really changed the economics of how all of the banking worked and the financing around hospitality. And in a lot of ways, we're still recovering from that, even though on the operations side, that it appeared to people out there that things were the best that they had ever been. But back to that investment side of things, how are you thinking about this, Russ, from your company in particular, that I believe you have over $1 billion in assets or something? around that.
Yes, that's right. And look, we went for a stretch for about 2 years where we didn't invest in anything, even though we kicked the can on a lot of assets. We bid on hundreds of assets, and we bought our first deal in a couple of years in November, and we're close on another transaction now. And what's changed is in the Great Recession and in really the years before, between that and COVID, we were buying both some cash flowing assets that you can add a little bit of value to, but we're
Right.
also buying distressed, broken assets that you could fix.
Yeah,
Operational
and those are
feasibility
probably
position.
the most fun for guys like you, right?
No doubt. They are the
Yeah.
most fun. You can get the most upside. The
Mhm.
challenge is in an environment like we're in now with such high interest rates,
Right.
because the drag for the 18 months or 24 months to fix an asset costs so much money now with this high interest rates that it's very tough to do that unless the assets are very cheap. And so for my business, and not only my business, we have had to shift to really focusing on those cash flowing assets where you
Right.
get better debt because
Mhm.
they have good in-place yield, and the cost during the time of your minor repositioning, you're still getting cash, and so it's just not as challenging, even in a high interest rate environment.
So just hypothetically speaking, so I could understand a little bit more, you would focus more on perhaps select service properties with major name brand companies as opposed to this resort type of property that I'm showcasing from you behind me. Does that kind of ring true?
It does ring true. I look, there are circumstances where a resort or a full service asset might have like in-place cash flow and you're buying it on that, but in general, that's tougher and it tends to need more time and more money. So you're right.
Yeah. Right. Yeah. And it's interesting how things are going right. One of the conversations I've been starting to have, I'm curious as to what your opinion is. When the select service hotel boom really began in the late 1990s, when the industry really discovered that as a real great development opportunity and a way to better connect with where the consumer mindset was, it really opened up a whole lot of possibilities and a lot of assets were built. And now, for I think for the first time in my career of 30 years, you're seeing much higher quality assets probably come to market that are converting or have the ability than it used to be with older side of exterior corridor properties, because now we're in the era of when interior corridors were first built. Is that is that correct, or am I just kind of not remembering things properly? 'Cause I do feel like there's more modern assets coming up now.
Look, you're right. I think you're right because of the time frame and the history of when these were built, but also because I do think that the equity and the debt is much more focused on sort of, getting away from those what we call Gen 1 assets that were built, in some cases in the 70s, and they're just not going to be the quality that the top brand families want or the top consumers.
Yeah, it's real true, and, Gen 1 prototypes, while they were great at the time, the brands learned a lot. The consumers told the universe how they want to experience those particular properties. So, over time, they go from the mothership brand, what they were originally built for, and then they kinda go to different, hospitality categories, traditionally, usually lower down the scale, except, which I love, you find a great asset and you find a way to breathe new life into it that separates it from the infrastructure was originally saying it could only be, right?
Totally, and that look, those are a lot of fun, and they still exist. It's just that in the high interest rate environment, the more that you have to do in terms of the bigger the physical repositioning, the harder that is, the cheaper it has to be to when you buy it.
Yeah. So really, you're just kind of you don't get to be as creative right now. You have to go and look more at fundamentals and cash flow and that sort of thing.
E Exactly right, exactly right.
And where are you looking? I'd like to break this down first to urban and then kind of break it out into other areas like Dallas, Fort Worth, Metroplex, and all of that kind of stuff. So, generally speaking, urban, I know you have a San Francisco property. Dan Lesser of LWH Advisors has said, "Hey, it's going to come back. Might take 10 years, but it's going to be a it's going to be a massive win." How are you seeing New York? San Francisco, Chicago, some of the household city names.
Well, let me say that we look at things on a submarket by submarket basis, and so I wanna drill down on that, but I'll answer your question, which is Look, a lot of the major cities have challenges. Some of them are unique. In New York, the union renegotiation is a big factor where union wages could go up, 25, 50%, who knows? And so the unknown of that is very tough, although we like the fundamentals on demand in New York for sure. San Francisco, we own in the thing is, I agree with him 100%, but 10 years is too long. You can't buy on a 10-year horizon typically. So it's tough to know. And we own there and always looking for green shoots. And so I would say while a number of urban areas are challenging, some for those specific reasons, in some cases it's like Miami where things are looking good, but they've been so good that you're buying off a pretty high number. Another thing I'll point out which we overlay is we've had a pullback in transient demand, and group is still growing. And so it is, it's a big factor on if you're looking at these limited service hotels, you don't really have the group aspect. You have to focus on transient. Will that demand growth be there? As opposed to, in some of the full service assets where you have the group component, it hasn't fully recovered in a lot of places, but it is growing year over year.
Yeah, and I'm definitely getting mixed messages on groups. I just did I'm here on in Long Island, New York, and I'm a board member of the Long Island Hospitality Association. We just held a meeting this morning, and they were saying, as well as some people at Hunter, that group is softening now. And that's the first time I'd heard that because group has been, I would say, a leader in helping the demand rush come back outside of the revenge travel that was out there for a while. Go on, Russ.
Yeah, no, I wonder if that's probably pretty market specific. By the way, I
Right.
grew up in Suffolk County, so I don't know exactly where you were, but I'm a Long Island boy. But I think, when you think of Orlando, group is still growing in Orlando, for sure. And of course that might be it's the best group, best group market in the country. But we also own in Anaheim, California, and other places where we do see group continuing to grow this year. Um, but I'm sure that is very market specific, and let's hope group doesn't slow down because um, you know, Glenn, one thing that's worth noting that even if revpars are going up, if they're only going up 1 or 2 points,
Right.
costs are going up more than that, and so we need growth to happen at a higher pace in order to really grow profits. And so, transient is if transient is slow or has a pullback like it did second half of last year, we need group or we need some reason to be positive.
Yeah, we definitely do, and that's why like this morning, and I'm out there now, Russ, just preaching that you've got to really understand the value of each and every one of your customers and try to market around to that individual and what they like. The select service hotel, it's much more difficult, but if you do have food and beverages there and the opportunity to get more money out of them, this is really the time to be able to do it. Russ, I haven't run the video yet, but I was talking to one CEO of a hotel management company that has a heavy focus on F&B, and they see themselves as restaurants that have hotels, as hotels that have restaurants, and they're making 50% of their revenue on food and beverage. So I think there's opportunities to be had everywhere. It's just how you look at it.
Yeah, no doubt. We look, F&B is a big component, and by the way, again, if you think about the group business, banquet and catering is much better profit margin. Love that in F&B. For a restaurant, you really need to be
Yeah,
good at it, and I'm sure they are. You're talking about that
yeah,
manager; they must
for
be
sure.
really good at it.
Mhm.
And so you do need to know exactly what you're doing. That's a very tough business, but can be a very successful business. And
Yeah.
if you do it right, to your point, you're going to drive more rooms because you have that great F&B outlet. So that makes sense.
Yeah, for sure. Plus, it appeals to the local community, and you could have a new revenue source. So, at select service hotels, one of the things I've been saying is, make a deal with that pizza place and stuff like that, and try to find local meetings that you could do because there are still a lot of people working from home. People need to get together. Got all that Smurf business out there, all the clubs, the teams and stuff coming in for a few bucks more, getting the hangout space dedicated to them, and monetize that space. But Russ, I want to go back to outside urban markets. Where do you see right now the most possibilities out there for opportunity, generally speaking, and success?
Look, we've found that there's opportunity first in in the investment side, in the size of transactions. So we've built our business often teaming up with very large institutional investors like hedge funds, private equity companies, insurance companies. And that space where, the equity check for a transaction is
Right.
is 50 million plus is extraordinarily crowded. And so when you see a good opportunity, it tends to get bid up.
Right.
Um, but what's interesting to us is because a lot of those institutional investors have gotten bigger, and those same investors that 10 years ago only told us they would look at transactions that were 15 or $20 million of equity today want 40 or 50. So we've seen opportunities in that, $15 million of equity, that size, where you're not competing with national players typically, and you can buy to a little bit of a better yield.
Hmm.
And if you overlay that today with transactions where you can find, in some cases, limited service hotels, but not always, where you can buy on in place trailing 12 yields north of 9% for assets that are, Hilton and Marriott branded
Right.
in good markets. We think that's very compelling because you can borrow accretively, even in this market, and you don't have to believe much.
Right. But it's hard to obviously, it's hard to find those deals. How often are they coming up? And, I don't wanna give away you to give away your secret sauce, but usually a lot of these things are off market. It has to do with the network of people and really understanding that. But, yeah, how do you generally go out there and try to find opportunities?
Look, you're absolutely right, and we've been blessed. Part of that is because we've been in the business for so long. We have those relationships. Because I do think that there are, of course, we buy things from brokers, which is great. Sometimes brokers have a process that fails, and they come back to those folks who spent time. That's why we bid on over the last 3 years so many assets that didn't trade at all. But in many cases, they'll call us back because, hey, you spent a lot of time on this. Maybe you can act quickly. But also, we have relationships with lenders and owners,
Right.
and they do many times want to come, "Hey, I wanna do a single shot. I wanna just see if you can hit my number. I wanna have price discovery, with
Yeah.
someone I trust who can execute." And so we're fortunate to have those relationships.
Excellent. I love that. All right. So, a question about Orlando. What do you think the impact of the latest round of theme parks wars is going to be? Epic Universe is going to be coming. Lowe's has got some new hotels in conjunction with that. There's other plots of land for, like, I believe, W and some other stuff. How do you see maybe the center of gravity shifting? What are you thinking about that market? And how do you think maybe it opens up a larger piece of the pie for everybody?
Look, of course, we love it as owners in Orlando. We love it. We want people to continue to invest there. What's fascinating in Orlando is, on the one hand, I would have bet incorrectly. It's kind of like Vegas. I would have bet incorrectly many times on how many more rooms could be in those markets.
Oh my god, right, I that's my Nashville, you know?
Okay, exactly,
Not
exactly.
where he's represented, and I forgot to account for the fact that it was exploding in size, and and the space kept getting larger, just like is happening, I guess, in Orlando. Sorry, Russ, I got excited about that for a second.
No, no, we totally agree,
Yeah.
and so we're bullish on that. At the same time, I think that the theme park developers have, Disney included, have gotten very smart, and so they're also, we say, they print hotel rooms. They build hotel rooms with a little bit of a different, they're selling theme park tickets as part of the hotel, and so we are bullish on Orlando. We think that the group business will continue. We love that people go there with their families and for business. And I think the theme park growth will help, but it's never a hockey stick because there are, the supply continues to grow.
Yeah, the only thing I think holding it back is definitely not gonna be hockey stick because there's only, a limited amount of people that could go to theme parks, and I think we're gonna see a lot more of a shift in business going to Universal, in the short term. They'll get more days of the week vacation
Yes.
than they had before, but it's not necessarily gonna generate, I think, a lot more trips in the short run. It's gonna be more of the next 5 years, that sort of a thing.
And Glenn, I'll add one more, if I can add one more thing to tie into what you said earlier. I think in Orlando, when you're selling rooms, because of the economics of going to the theme parks, what you're trying to give guests is one more half day or one more day without going to the theme park. So, hey, come here for 4 days, and your kids will be very happy by our pool with our entertainment and our dinner for one night. And by the way, then you don't have to chase them around. You can have a beer and watch them. And so the economics of that, which are saving those customers a lot of money by giving them a decent experience for a half day or a full day, is really what you want to do to point on F&B and other things you can deliver for the customer.
Yeah, I mean, DoubleTree is a great hotel in Orlando. I would totally stay there. You got what, 3 pools over there, right? Restaurants. You can see probably SeaWorld right from there, which is a whole lot of fun. So who doesn't like that? I know my kids turned 21 this past weekend, Rust, but when they were 3 years old and we were at SeaWorld, I could have used a day at the hotel. What's your big advice going forward over here?
My big advice, and this has been painful for us personally and professionally, but be disciplined. Believe in the metrics you need and your underwriting. And so it is frustrating because for so many of us, the transaction volume has been down and it's been just less the fun part of the business for several years. But we need to remain disciplined. And I think things will revert to the norm in terms of transaction volume and the ordinary course of business.
Yeah, because they do, and everyone always forgets this industry is cyclical. What has been will always be again. And I've been joking around lately, Russ, that the industry tends to, yeah, in generally speaking, get stuck in this whatever mode we're in at the time. They think that's the only way it's ever been, right? Like, oh, we've never had a good day ever, or it's like, woohoo, it's never going to suck again. But there's never any reality to how it comes around. So.
100%. We're not. I've got a 21-year-old and a 19-year-old, so we're contemporaries. You and I know it comes and goes, and so you have to prepare and plan for the next one. Next.
Yeah. All right. So I grew up in Comac. I live in Smithtown now. What was your home
I grew up in East Northport, pal, right near you.
No way.
I went to John Glenn High School.
Oh, that's pretty cool. I was at Fomax South, but we closed that out in '88, and it went away. It went away for forever. That's pretty cool. I love it. Yeah. Anything else that you want to add before we go? Oh, I got another question for you before we wrap up here. How are you thinking about utilizing technology maybe to enhance, streamline operations over there? I was just asked this question again. I'm asked every single day, so I thought I'd ask it of you.
I'm so glad you did. It's a great point. We've leaned in heavily to technology in the recent years, and what that's doing for us is by both grabbing technology that a lot of people have, but making sure it's there as we're making the decisions, it's at the right point. Where should we be? What are the benchmarks? Why are we doing better or worse than expected? What are we seeing in terms of yielding going forward? But also, we have a lot of proprietary technology, proprietary data rather, from
Yes.
not only our portfolio but all the assets we've looked at over the years, and so that helps us get smarter about what we should expect when markets are growing, when markets are shrinking, and how to make those decisions and give those tools to the decision makers at the hotel. Because every day, every month at the hotel, there are 100 decisions made that impact your NOI on costs and revenues. And so giving them the data at the exact moment of decision making is critical.
Yeah, and I'll tell you what I really love, Russ, is that every single time I feel like we've hit a ceiling in the industry, something new with technology happens. It's been for my whole career, 30 years. It blows it through, and all of a sudden everything changes from the introduction of the internet all the way towards the cloud, now into AI and the tools that we're going to be able to do with that. So even though we're getting pinched right now with your ability out there to be more profitable, tools that are coming or are already in place can really start to make that difference. And I think it's going to open up a whole new world of opportunity on the operation side, but also, Russ, on the investment side. It'll make you guys smarter before you go into a deal, right?
100%, I agree. I'm looking forward to those tools. We're trying to be on the cutting edge, but you do need to you do need to try these things and get reps in. But I'm excited as well. I totally agree with you.
Awesome. Russ, thank you so much. I really appreciate you being here. This was a whole lot of fun.
Thanks so much for having me, Glenn. I appreciate it.
Great. Thanks. And we'll see you next time. And also, guys, we will see you next time. But sure, you're going to want to download, watch all of that stuff. Make sure you do that watch, listen, follow us wherever you get your shows. And also, I want to thank again our friends over at let's go thank like Actable. Actable gives you the power to profit. Visit them. Thanks so much, everybody. You've got one life so blaze on, and